Hey there, everyone. Mike Mibach with KTVU Fox 2 in the San Francisco Bay Area, talking coronavirus, talking finances, even taxes with Winnie's son, managing director of Sun Group Wealth Partners. Look, everyone pays taxes, right? And so I want to open this up with just a social question about President Trump, because the New York Times had this piece saying that he made a $750 tax payment. He's denied this, saying that he's paid taxes. But it was trending out there on Twitter this week. I'll just open it up. As someone who pays taxes, is this a talker, or should we not focus in on this?
This is a big deal, Mike. It is a huge deal. I mean, I'm talking to my clients and you said it's trending all over social media. In 2016 and 2017, President Trump, who is technically what everybody's assuming a billionaire, paid $750 in federal taxes. That's a big deal because I don't know about you, maybe we need to reanalyze our tax strategy here. But certainly, I mean, I'm sure you're feeling this way too, Mike. How many of us can say that we paid $750 in taxes? That was a really long time ago.
Yeah.
And so if you're bringing in this billions of dollars of revenue, that definitely raises some eyebrows.
All right, let's stay in DC because a lot of people are struggling to pay taxes, and they're looking for some more stimulus. And I know House Speaker Nancy Pelosi is throwing out there that, and other Democrats, the $2.2 trillion plan with Steve Mnuchin. That's lower than their initial $3.4 trillion plan. It does include a $1,200 stimulus check for those who would qualify for it. And I know they want to get this passed, before the election. From what you've read of it, do you think so? Do you think Republicans, or enough of them, will be on board with it?
I hope so. I think the problem here is that both parties are quite far apart. We're talking over $1 trillion of difference. Democrats want a plan that's 2.2 trillion. Republicans are saying we want something closer to the 1 trillion mark. So there's a lot of room to go there. It's really unfortunate because Americans are still waiting. However, we're probably closer now than ever simply because of political reasons. A lot of the officials in Washington, D.C. right now are up for re-election or having their position being challenged. And so therefore they want to show their constituents that they can get a plan done. So I don't know, Mike. I mean, it seems like it's like this ongoing question.
Yeah. Here in the Bay Area where I'm at, the real estate market has been fairly strong, surprisingly, I think, during this pandemic. But this week there was a forecast out that across the United States, there could be a big increase in foreclosures. And one reason is because millions of Americans, when they continue to not work, they've been fired from their jobs, they've been let go, or they've been furloughed. If someone is getting laid off, and the question here is more, what do you recommend? And they were to get a severance package. Do you take the lump sum? If there's a second option of an annuity option, do you do that? What would you recommend to your clients here?
You know, Mike, it's a good question. So we know that that is a big part of like pension or severance. Which one do you take? I think it's a very personal question and one that I would highly recommend you speak to a very experienced financial advisor that has dealt with this. You know, we've done with this for hundreds of people online, on meetings and in person. The reason I say that is because, you know, for one person, an annuity might make a lot of sense. For the other, a lump sum might make a lot of sense. Everybody's very different. I'll give you this much. If it were myself personally, because I have a husband, I have children, and I would want to make sure that at least what I've accumulated at my workplace will land with somebody in my life, I probably would choose the lump sum over the annuity payment method. However, if you're single and you're just or you don't have children, maybe the annuity option might make a lot of sense because then you're guaranteed a specific amount for the rest of your life. It could be based on one life, it could be sometimes based on two lives. So you really have to look through the fine print and make sure you understand both options. I would definitely recommend, if you're looking at this decision, to consult a professional.
Okay. Winnie, you're a busy person. I mean, I know I'm lucky enough to have you once a week for 10 minutes, but you're helping all your clients. You're writing articles, and your latest one that was published in Forbes, it's titled "Why 2020 Should Be Your Year to Consider a Roth IRA Conversation." We've had this conversation before, but you're hot for this whole thing. I mean, you talk about it a lot, and I want you to drive it home again, just as you did in your article that was published last week here.
Thank you, Mike. Actually, it's a big issue, and I really want everyone to pay attention to this, especially because we're coming to the end of 2020. The reason everyone should consider the Roth IRA conversion is if you have a 401k from a previous employer, maybe an old IRA somewhere, or you're just looking to sort of reassess what you have in a tax-deferred shelter method. This is a way to turn something from being tax-deferred in your future retirement planning life to something tax-free. And because we do know that taxes are going higher, New Jersey's just announced that they're going to be increasing their top tax bracket by over 10%. This will start to trickle out in other elements of your life. So the more money that you can change from something being tax deferred to tax-free, tax deferred to tax-free for retirement is a big, big deal. And the clock is ticking. So if you're considering this, not sure whether or not to do it, read the article, see what you think, and definitely talk to a financial advisor or maybe even your accountant to see if it makes sense for you.
Do you usually bring up this conversion with your clients, or are they actually knocking on your door saying or asking you about it? In your take?
Well, Mike, I wish people were knocking on my door, but certainly I think that's the value of having someone who knows you and your finances well. We definitely are very proactive and we're talking to our clients. We've been doing these sort of Roth IRA conversions for years now. So we have a lot of experience in doing them because when you do this, you don't just want to decide, oh, well, when you talked about it, so I'm going to call and just do this. You actually want to figure out the pros and cons. There are negatives to this and there are positives. So make sure you at least read the article, do your due diligence before you decide to go this route. But I love the fact that, like, as I get closer to retirement, right, in my 60s and 70s, like every penny that's in my retirement savings is mine. It's 100% tax free. So it's not like you have this taxable amount that's going to be due when you retire. So it's a big deal.
Hey, 401k, I think I've been with my current company 15 years now, and I remember when I hooked up with them, I did roll over my 401k from my former employer. And so people who are maybe starting a new job, maybe they got let go again during the pandemic. Is that still kind of, I mean, I haven't been in the mix here in a while, lucky enough to say that, but is that kind of the trend? You recommend people to roll over their 401ks from their old employer to their new?
Not necessarily. It
Okay.
depends. There's sort of
So
three
I
options.
did it wrong. Is that a bad move?
Well, Mike, we would have to talk offline about that. But it's not too late. We can still talk this through. But I will say this: if typically in the financial industry, we often say when you leave your employer, you should take your money with you instead of living at your old employer, where the options could be limited. But coming to if you want to roll out your old 401k to your existing new employer, like Mike's been there 15 years, it could make sense. If your balance is small, that might be an option. But don't forget, you also have the option of actually transferring it from a 401k to an IRA rollover, which is individual retirement account rollover. The advantage of that, there are definitely some, which is you get a tremendously increase in investment options, and you can be very proactive in your planning. But if you transfer it to your new 401k, if you have a lot of options or you just want to see, that's okay too.
Yeah. Okay. Hey, my children are asking me about going out and getting pumpkins because they know October is right around the corner. And then, I'm in the garage. I see the decorations. Now I'm like, oh, the next 3 months are all about the holidays. Here we go. Holiday spending. This is my last question for you. Should there be a lot of focus on this, both on the retail side of things, but also for us consumers? Do you expect people to get out there and buy this season?
We definitely see this as a tip. We're seeing a lot of information coming out that this will probably be a very big year for online shopping. Doesn't mean you necessarily need to jump on that bandwagon. I actually encourage you not to, but I would say think about investing in experiences right now. Keep that money tight. Keep it safe. Collect your money, and just like the pumpkin idea is great. I just picked up a pumpkin from my kids last night. Think about those things, and instead think about adding some more money into your investments this year before we get to 2021. I think you're going to be really happy you did.
Best gift for the family, best gift for yourself, and try to save as much as you can. All right. Winnie Sun, Managing Director of Sun Group Wealth Partners. Always a pleasure, Winnie. Have a great rest of the week.
Thank you, my friend. Take
All
care
right.
now.
See you.